20. So related for that, they are discussing about planning activities of the audit engagement, right? The last week we completed many areas. They are planning to conclude the discussion about audit planning and risk assessment. As I said, people who are joining virtually, I hope we are audible enough.
Yes, sir.
As I said, audit planning and risk assessment is a kind of a vital role in the audit engagement. Why? Recently, according to the plan we are executing, and end of the day, we are concluding a holistic plan. So the whatever the target, whatever the goals we are achieving, we should have a proper plan. Especially in audit engagement, we should have a proper plan to continue audit. So then we have to do the plan according to the risk assessment. Why? What the reason? We are doing risk-based auditing. So we are dealing with the risky area. Especially we are dealing with the risky area, we have to do a proper plan. Right? If it is difficulty, what is that? You are going to do some kind of activity, right? If it is difficult means you are facing challenges, you are facing a risk. If it is so, you should have a proper plan. So how about auditing? Auditing is a risky job, as I said, right? So then you should have a proper plan. So that's our key with last two methods, right? So then today I am continuing the rest of the things. Basically, I stopped with maturity calculation, I guess. Maturity level. This is really important. You are having this slide deck with you all. I hope that you are going through these things. Once you are doing maturity levels, we are having levels of maturity. Firstly, what we understood is what's the meaning of maturity. Last week, people who not joined last week, we had a detailed discussion about what's the meaning of maturity, right? So at that point, I told you one of my experience, right? Once you're calculating maturity levels, so if you are dealing with liabilities, what we have to do? If we are dealing with the sensitive information like sensitive balances like legal expenses or kind of a donation, salaries, that kind of a disclosure we have after the P&L, we have clear disclosure. So the profit after tax derived after deducting these expenses, right? So that disclosure containing very sensitive information. This sensitive information should be audited by using a different scope, by using different maturity level. But here we are calculating a common maturity level for whole engagement, whole process, right? But this is kind of a calculation. This is about kind of a number crunch process. So that we do calculate this maturity level based on numbers. But my request is, once you are dealing with this kind of maturity level, don't purely depend on the numbers. You have to use your skepticism. So the balances should be evaluated qualitatively. So that's kind of a basic norm in auditing. Yeah, based on a numeric figure for the maturity levels, but we should focus about the qualitative aspects of the numbers, right? I can give classic example. So if you are dealing with the differences in a system, right? So then you are doing independent calculation about interest calculation, whatever the system figure, system result. So then you are arriving with some different decimal numbers. Right? So you are saying that according to the difference, it's less than 50 rupees. Whole sample, 50 rupees, right? But it's a calculation from the system. So if you are having such a difference, it should be a concern to you based on the nature of the difference. You can't say that our maturity level 500,000, difference is 50. You have to evaluate this difference. Whether it's a system related difference, is a kind of a deviation between the manual system and the manual calculation and the system calculation. The logic behind this difference should be evaluated. If it is a system, it will create a significant impact to the overall portfolio. Maybe a system error, right? So then my message is, my request is, you have to evaluate whatever the difference, rather not depending on the numerical number given through the maturity level, you have to evaluate qualitatively, right? So that's the basic presumption once you're dealing with maturity levels. I hope that is clear for you. So then I will start from last week lecture. What we discussed? We discussed why we are using maturity level. What's the reason? Firstly, we discussed definition for maturity. So that we refer to LKS 1, right? Maturity definition was there in LKS 1. What's the maturity? So whatever the information you are dealing with, it impacts the stakeholders listed. The relevant information means material. So then, end of the day, you are signing audit report as auditor. So then, management and other parties stakeholders taking decision based on the view that this is audited financial statement. Audited financial statement. We have adjective. So to that adjective, stakeholders are giving a real value. So they are taking decisions based on audited numbers. So then audited numbers given from the auditors. So then they have certified, they have issued audit opinion, right? To issue that audit opinion, we should focus about the maturity level. So the how this information will impact to the shareholders, stakeholders, right? So based on that, you should calculate the maturity level. So then I explained that should be depend on perspective and expectation of the stakeholders. Keep in mind that two words. What is that? Perspective and expectation of the users of financial statement. That's really important. You have to calculate, you have to decide the maturity levels based on perspective and expectation of the stakeholders. Basically what? So the expectation and the focus about the stakeholders. The focus may be something else. You are calculating the maturity level based on some other numbers. If it is so, two different, the targets. That is not viable. That's not practical, right? So your maturity level calculation should be based on perspective and expectations of users of the financial statement. Yes, maturity calculation is a difficult task. Because really difficult the keeping calculating a number. So then you are calculating a number. Whatever the stakeholders using this financial statement should be relevant. So that you are calculating, you have simply take this. You have a financial statement, right? Financial statement. So then you are the auditor. So you assume that this will use this type of stakeholders, right? They are taking decisions. They are taking decisions. These numbers will impact to these stakeholders about 50,000. About 50,000 balances will impact to all stakeholders. So then as auditor, what's the duty we have? All the above 50,000 balances should be tested and controlled. So then we have to calculate this number. How difficult that is, right? How we can assume, how we can read this expectation and perspective of shareholders, not shareholders, stakeholders. That's difficult actually. Calculating a specific material level is difficult for audit. Really. Think about that. So then it should be changed to the person to person impact, right? So as I said last week, in the insurance company, the example I discussed, the material level 2 million, as according to the planning activities, material level 2 million, there was a balance 250,000 related to donation. That is a relevant information, sensitive information to stakeholders. Who is the stakeholder? Insurance regulator. Insurance regulator came and asked, what is this 250,000 balance? So then calculating material level is really difficult, right? So then I keep on telling that material level, not only one material figure. Material levels are there. What it means to you? Material levels are there. They can run. In audit, we have different material levels. As I said, once we are dealing with these controls and control environment, we discussed levels of control, assessment level control, financial statement level control, entity level controls, right? At that point, I told in auditing, we are dealing with two different levels, assessment level and overall financial statement level. So why we are using this kind of two levels? To take decisions. So in organization also same. So in organization, you know that we have strategies, right? Strategies can be divided to different levels. Right? Corporate level strategies, right? Business level strategies. So then corporate level strategies, how about that? We are taking to overall company. And business level strategies, functional level strategies. So that relate to that department maybe. Only that function, right? So likewise, whatever the entity, whatever the organization, you are taking decisions based on different levels. In your form also same. So then some of the decisions will impact to all the members in your family. वागे किधर AC करंट किधर ठीक है is the decision taken to all of the world. So that will impact to overall members in the home, overall home level, overall financial statement level, right? Some of the decision what a degree kan කරන්න කියලා හිතනවා. වා අඳුමක් ගන්න කියලා හිතනවා. මේක මොකක්ද? That will impact to you only. වා මෙහෙම කියනවා අඳින්නේ මේ විදියට strategy එක. ඒ කියන්නේ shorts අඳින්නේ. ඒක මොකක්ද strategy එක? Is that impact to father? Father ට නිකන් වටෙන් impact වෙන්න පුළුවන්. There's no direct impact. Right? Direct impact. That only impact to you. So likewise in organization also same. In audit also same. So we are taking two different decisions, two different levels, assessor level and the overall financial statement level. What it means to be assessor level in audit. So we are taking balance level decisions. So we are taking that according to the statement, we are telling that inventory balance is incorrect. So the balance level, assessor level, existence of the inventory, we have a doubt. So then how about other balances? Other balances we are okay. So then that decision was taken only for the balance level. So then we are taking some overall decisions based on the numbers. So then to take those decisions, we should calculate different levels of materials to audit. Different levels of materials to audit. That levels can be defined like this. Adding materiality, tolerable error and nominal value. Adding materiality, tolerable error and nominal value. So these are the three levels. You can say PM, TE and NVO SAD. Summary of audit report. So then we should know how we can calculate, how we are designing this, how we can use this. Practically, you have to understand this, right? It's really interesting. So, what are the material level? All material level is सामान्य. सामान्य पारे इंग्लैंड साली दो वा अंदाज़ दे रहे हैं. अंदाज़ देना नाम है तो हम मात्रा इतना देने हैं, बस हमारे को देने थे, तो देखिए मत कहते तो है, कौन से है, रियल बेटे के लिए क्रेडिट, क्योंकि तो देने हैं, ऑडिट के अंदर का नाम की हुई, can read others mind, तो देने, हमारे लाट फोन नंबर इतने के लिए पास से पूरा तो सिचुएशन दिया ना, sometimes, so I want to say that. So you have a material level, right? Well, material level लेगा 5 rupees it turns to 10 rupees. Now 20. एक time में 5 से आप देखना 100 रुपये. So the material level change. So that won't impact to you. That's the materiality. That material to you. What are solid material पास से किया ना you are not getting that decision, right? So that's about materiality. So you have to feel that. So I also having a materiality level. So then, why you are having that materiality level? To take decision. Take decision. So audit also, materiality level to take decision. So that depends on the nature of the company, the size of the company, right? Then all the dummy company and the material level, all material level, different level. I think what I say, yeah, you will take a value, you will take a degree. What development is all material level is a development. In that, what company is a local asset basic expand vendor, you are having a large material level, right? Once you are having kind of a expansion in the organization, you are having large material level. So that sense should be there. You should understand what it is. So then you should understand why we are having, you understood that, why we are having material levels. Now we are going to understand what is this material levels, how we are going to calculate this, what it means to you. So then it really, calculation related thing, will be difficult to understand the logic. Try to understand that. So we'll do some calculations and then you can easily get through this and then deal with this. Once you are deciding, taking decision, you have to use this. Let's say in the exam, this will be tested. So these material levels can be given, right? So according to the given material levels, these statements are there. So the actual auditor, what you're going to do? So that's the knowledge aspect will be tested in the exam. So then we have to know what it is, why we are calculating it, what's the material level, what's the total level, what is the gap between that. So that is the knowledge aspect required, right? So the planning materiality. Planning materiality is the financial statement level materiality. Once you are taking decisions related to financial statement level, you base on the planning materiality. And then tolerable error. So the up until this limit, you can tolerate. Let's say planning materiality. Let's say 50,000. According to the organization, planning materiality 50,000, right? And then tolerable error 25,000. 25,000. So then in between these two, we have 25,000. So what is this? This is the tolerable error limit. Tolerable error limit. Up until this point, we can tolerate. So the after this, we have nominal value. So the you can remember that once I am starting the audit lecture series, we discuss this kind of a chart. So once you are giving what is opinion, we have this kind of a chart. What is this chart? SLA 705, giving a guidance. Once you are receiving audit opinion, you have to evaluate it, significance and the permissiveness. So in audit, we may have different mistakes, challenges. So what are the two challenges? It may be a mistake or it may be a what? Yeah, mistake or fraud. So that's the risk of material misstatement. Other than that, there may be a what? I discuss. Remember, yeah, they might be put out and then so what are they? There may be misstatements and scope limitation. So once you are doing auditing, these are the two things. So the misstatement can be divided into two. Maybe mistake or fraud. Scope limitation, we can't audit. They are not giving these things. So then there's a land purchase. They are not giving the land transfer details or the whatever the required document. Deed and the transaction document. But this is scope limitation. There's a area, so they have located some inventory items. That is that that's kind of a restricted area. You can't enter there. So from the inventory balance, 80% inventory percent that. It is so it's a scope limitation. Right? So then in audit we may face two challenges: the statements or scope limitation. So then we have to evaluate that whether it's material or material plus pervasive. Material or material plus pervasive. It is only material we are qualifying. Material plus pervasive. Material plus pervasive. Pervasive will impact to the overall financial state, right? So then to evaluate that, we have material levels. Based on this material level, you are evaluating. right? So then immediately you are facing a kind of a misstatement. You are once you are keep doing your audit procedures, you are highlighting, you are going to capture some misstatements, maybe a mistake or communication or whatever it is, right? Let's say your material 50,000, your misstatement, let's say 5,000. 5,000. Then what you are going to do? Your PM 50,000, tolerable 20,000, 5,000 is the misstatement. Up until 20,000, 25,000, you can tolerate. You can tolerate, right? So then, after the less than 25,000, you can say that's immaterial. Immaterial, right? Less than 25,000. Sorry, I didn't get this. Again, I'm telling, right? So they have three different maturity levels. Three different maturity levels. Your planning materiality 50,000, right? Maturity 50,000. PE 25,000. That may be 2,500, right? 2,500. So this is the nominal value. Nominal value in the sense below that we consider that as immaterial. Right? So they're not taking for decisions. So the less than 2,500. So what is this? This is the tolerable error limit. So the up until this we can tolerate whatever the error limit. So the beyond that we can't tolerate. They are taking decisions, right? So then, if we are getting a kind of a difference more than this 5,000 difference, right? 5,000 difference. We can't say it's immaterial. Why? It's more than 2,500. So then 5,000 kind of statements, we have to keep that as a audit summary element. It's a number we can pass to the summary of audit difference. So the summary of audit difference, what it means. So once you are doing auditing, once you are doing audit procedures, you are highlighting, you are facing some issues, right? So limitations and the statements, you are summarized. You are going to summarize that and you are evaluating overall financial statement impact. So then, once you are checking your electricity expenses, you are identifying 5,000 difference. Once you are checking your depreciation, again 10,000. So what you are going to do? You are going to list down these things. List down and you have to evaluate as a whole. Then we call that as summary of audit differences, summary of audit misstatements identified, right? So the less than 2,500, we consider that as immaterial. More than 2,500, so you consider as an item we are put into summary. Summary. So then you are identifying 1,500 difference. 1,500 difference. So you can say that it's immaterial because according to the number given, according to the calculated number, 1,500 is the immaterial figure. So the sum of the the leasing companies, we don't care about the 2, 3 three-wheelers. So once you are calculating, inventory, whatever the inventory calculation, these vehicle count. If there is a missing 2 three-wheelers, maybe immaterial. So likewise, 1,500 may be immaterial. You can neglect that. So then again, I am telling, once you are neglecting this, what you have to do, you have to relate the qualitative aspect of this difference. If it is a system-related difference, you have to question over that. It may lead to a significant difference, right? So then difference should be evaluated. As you are highlighting that as a nominal value. So then once you are having 5,000, once you are having 7,000, 8,000, 9,000 differences, we have to put that to the summary of what is different. In between nominal value and the T. Nominal value and the T. So then in between nominal value and T, you have a kind of a summary now. So then end of the day, what you are going to do? End of the day, you have to summarize this and calculate whether it go beyond this T value. Can you tolerate up to that limit? You have come up with a list of differences, statements. Now you are checking if your tolerable error. So the tolerable error limit is still 25,000. You can tolerate this level of issues. Right? So that's why we are calculating maturity levels. If we are not having this kind of maturity levels, we can't decide whether we are getting that to the list or if we consider that as immaterial. So based on our calculated matrix levels, we are taking those decisions. So then I can show you all the real working paper to use these calculations, right? To calculate matrix level as well as how we are going to summarize these differences. After summarizing, let's say we have a difference 23,000. 23,000. Again, we are putting to here 25,000. So then, obviously, this summary increase the P value. So there is a possibility for audit qualification. Audit qualification. So then our tolerable error limit exceeded. What are the tolerate level? Again, Tarahayana limit the auditor Tarahayana limit TE level again. So then auditor get angry based on TE level. So the tolerance level of auditor. So then you can do some mistake in between this. So they have kind of a justification that up until TE level there is no impact to stakeholders. Right? So above the TE level, if you are doing something, you have to take an action. You have to correct it as a management. Right? So once you're concluding audit, you can some of the differences have been corrected. Some of the differences have been marked as a summary of audit difference item. If we have audit difference, we have different justification there. Some differences immaterial. Don't need to do any adjustment. Some differences material. The management has taken steps to correct that. That can be identified as corrected misstatements, right? Some of the difference they have not corrected, we have parked that in summary of audit difference, right? Keep in mind. Once you are parking summary of audit difference, it's indicating a risk, right? So that we have only kind of a corridor. If you are exceeding this limit, it will impact your opinion. How about this level? For this level. If you are exceeding this level, definitely audit qualification, no, that will impact the overall financial statement. So the exceeding DE level, you can decide that. You can decide it. DE level, you have to evaluate that and you have to talk to some other partners. So the general terms, you have to put that to the technical committee. Technical committee in an audit firm or organization, you may have technical teams. Technical teams represent different audit partners. So they are come up with one table and discuss. So then what we are going to do now? So in this audit, our maturity levels are this. So that we have this type of list of misstatements, right? So it exceeded our DE level. What do you think? Do we need to qualify? Do we need to give adverse opinion? So then we have to discuss with them. So according to the discussion, you can come up with the audit opinion. Audit opinion. So that's a basic understanding you should have. So in this side, you can see usage of these levels. Timing maturity, tolerable error and nominal level. These are the usages. How we can use this level for your audit procedures. So the tolerable level is the level you are using for transaction level, audit procedures, to select samples, decide audit stage, right? So this is kind of an operational level maturity figure, right? Once you are doing audit procedure, TE is the number you have to use. Because it's transaction level. Once you are doing audit procedures, means you are doing audit procedures for which level? Balance level, transaction level, right? So then you have to use that material. You have to compare with that. So then in audit, we have different material level. This one is the overall financial statement. This is balance level. As a whole material level එකක් තියෙනවා. So then ඒක තාත්තට අතදාලා අපට අතදාලා maybe 1 lakh. ඔයාලා ගෙදරින් 1 lakh පිළිගොත් එනවා. 1 lakh maybe material level to overall family, right? So then that should be deviated with your family members, right? To your father, to your mother, to you. So you should have separate material levels to take decisions. So the material level is material level is 10,000. So then some other, your sister's material level may be 5,000. Your mother's material level may be 15,000. Your father's material level may be 25,000. So then two different elements, two different parties, they have different material level to take decisions. End of the day, what we have to do? we have to evaluate what is the overall impact to the family by taking this kind of different material levels. You are telling that, so that I have this much of donation. They can. 5,000 donation. 10,000, under 10,000, I have done this much of donation. So the 15,000, mother has done answer at the product level. So then, end of the day, you have to evaluate what's the total donation. So then, if it is going 120,000, you have to take a decision, right? So it will impact seriously to your cash flows. So that's something else, not related to the material level, but it's same logic behind that. To take decisions, you should have different material levels. End of the day, all the material levels and the deviation should be summarized and take a decision. Compare with the overall material level. Likewise, in audit also say what we have to do. We have to have overall material level as well as we have to have transaction level material level. Otherwise, we can't use that. Practically, we can't survive. Right? So we have to use this, and then end of the day, or whatever the differences, issues to be summarized and take up to a summary, and then you can take an overall decision. That's about maturity levels. So then I will take you through some calculation about maturity levels later. So then you can understand what it is, how we can use the basis, and then how we can calculate these percentages. So then before that, you should understand the logic behind that. Why we should use maturity level? So then do we need to use maturity levels for it? And what are the stages we are using maturity levels? Why we are using that? So those questions should be answered by yourself from your mind, right? Otherwise, don't take as a parent. This is 3 levels are there. So if it is so, it's very difficult to understand. You should have a proper answer. Why should we have a maturity level? Sorry. Is that a permanent figure for each entity? No. So the same entity, 2 different years, 2 different managers, 2 different auditors, they will calculate different maturity level. In the same audit, different stages may be the material level change. Why? In the interim material level may be changed. Yes. The material level is a kind of a threshold we are using to take decision in an audit. Otherwise, we can't take decisions. Take decisions, we should have different levels of decision. For that, we have different levels of material numbers. We have overall financial statement, overall balance, and that. I hope this is a bit clear, but if you numbers, I assume that not 100% understood, but some extent we should have a basic understanding about this material calculation. The people who have already done this can visualize your practical on-field experience. Cross-check with whatever things I discussed. You can challenge to me. So I did this way. I got this kind of material level. So you can take many judgments. So I have faced different challenges once you are concluding this material calculation. So then, let's say we are calculating material level, they are completely audit. So if you are going for a review, the reviewer may challenge the material level. Your material level is wrong. If it is so, it is a kind of audit failure. So the overall material level is incorrect mean, the basis incorrect mean, whatever the each and every audit procedure, execution, conclusion fail. We have to get a pass mark to material level calculation first. That's very difficult. I can remember one of audit. Actually, I took that audit to global reviewers. At that time, that manager resigned. So I got that responsibility to take that file to reviewers, right? That's really difficult. So I am representing you some other members, managers role, right? So what happened was the material calculation is correct. So then global reviewer telling your material calculation is correct, but you compare to the last year, your materiality numbers have been changed a lot. Your materiality numbers change a lot. It means last year materiality level PM 100,000. This year you have used 50,000. 100,000 to 50,000. There's a significant change last year to this year. And that significant change, we can't see that in the company. There's no significant change in the company environment. From the revenue, from the whatever the expenses, balances, there's no significant change. But as auditor, you have changed your numbers. What is the exact reason for that? How you can justify that? As auditor, you have to justify before you are starting your numbers. If you have used the previous year numbers, you have to justify with that. You have done the audit for last year, right? You have concluded already. So then, you are calculating material for this year. This year material you should kind of a comparison with the last year. You justify. So then you can say that the last year profit was this much. We had this kind of a plan, but with the COVID and these things, overall the calculation profitability reduced. So profitability reduced and what the material reduced and all. And what the reduced and not ever display then. Wage 2022, 2023, 2023, profitability reduced. Right? Profitability reduced, and then your 50,000 DE should be 60,000 or 30,000. This should be 30,000, right? We have to work for larger scope. See? If you are reducing your materiality levels, mean, and then your scope may be higher. Can you remember that last week I told you? This number like the AC machine remote, right? AC machine making cool ready කරන්න නම් මොකද කරන්න ඕන? number එක අඩු කරන්න. Material level අඩු වෙනවා කියන්නේ මොකක්ද කරන්නේ? scope එක වැඩි වෙනවා. ඊට වඩා වැඩි සේරම බලන්න. Right? So then because of the COVID impact and whatever the economic challenges, so the profitability reduced. Company impacted, right? If company don't have much money to pay it out, if it is so, your balances, your decisions depending on very efficient manner. Otherwise, it will impact the organization, right? So once you are taking your decisions, your material level should be reduced. So then this time your stakeholders 2,500 will declare. Last month here, don't care about that. Right? So then, how about now? Now we are in a serious situation. 2,500 also material to us. Now we are trying to save at least 1,000 also material to companies. At least we are not, we are trying to save A4 copies. We are trying to reduce, the tea and coffee. Everything we are trying to reduce. It means it will impact your company. It's relevant to your company. So then with the company profitability and the expansion and whatever the strategical decisions, your material level may be acted from year to year. So as auditor, what we have to do? We have to justify the change. So then, as a stakeholders, decision also can be impacted based on the numbers. So that's the basic understanding I want to give you all about materiality calculation and the materiality levels. I hope it's clear. The doubts? Formula, what is the doubts that is?
In the same example, let's say we have a summary of 40 differences. For that, accumulates to 23,000. 23,000. And we have another transaction below our stat level, 500. Let's say 2,000. If we add that to our summary of 40 differences, it will exceed our DE level. Do we consider that too?
So then once you are dealing with that, you have to evaluate the debit or credit. Let's say we have different depreciation overstatement, let's say provision understatement. So then debit credit will net off. 2,000 may reduce the 23,000, will you have to 21,000. Right? If it is same nature, overstatement of expenses, right? The 23,000 plus another 2,000. Exactly exceed the 25,000. So then we have to evaluate whether we are going to impact to the financial statement or not, whether we are going to qualify it or not. Have to evaluate that. So this is kind of a basic tactic we are using to control audit, take distance, decide on the procedure, right? Not like this, getting an engagement team, engagement letter, arranging, the planning documents. Risk assessment also with complex. Material calculation also with complex. Our technical people, the executive members in the audit engagement should participate for this type of area to calculate material. But as audit junior or trainee, they have to know the logic behind this. Otherwise, they are the people who are performing the audit. They should know the logic behind it. But and if it is so only they can understand what it is and they can use accurately for your audit procedures. Otherwise, they are just putting these numbers in their working papers, they are doing something else. End of the day, once the manager revealing the audit file, they can understand there's a difference more than this. They have calculated the difference. Sometimes what they are doing is this. They have, let's say, data portfolio 5 million. Data portfolio 5 million. Plus selecting a sample, let's say 10 debtors. 10 debtors, altogether 1.8 million. 1.8 million. Right? So then you identify some difference, bogus transaction of 0.2 from these 10 debtors. You are telling that 0.2 is immaterial figure with compared to material levels. 0.2. We apply 0.2. So there's issue. What there's issue? Can we conclude that in that way? Again, I'm telling we have 5 million balances. Let's say our PE 500,000. PE 500,000. Nominal value 100,000. 5 million again is the landing material, right? The 0.2, 200 million is the difference, right? 200 million. So what you are going to do? Can you put 200 million as a stat item? So this is a nominal value 100,000. And less than 100,000, consider as immaterial. But higher than 100,000, less than 500,000. Right? So we are putting as a item in audit summary. So if you don't have some other difference, you can tolerate. Right? You can tolerate. If you have some other difference, if you are exceeding 500,000, you have to take decision. Yeah, imagine you don't have any other decision, any other difference. So you are keeping that as tolerable error summary. That summary, right? So my question is, can you do that in this way? You can't do this, right? Why? Correct. You have to extrapolate this 200,000 to the portfolio. So you have only taking this difference only for the sample. If you are getting 200,000 from only 10 debtors, if you have 100 debtors, 30 debtors in the portfolio, you have to multiply that 3, right? Can you assume that? Can you understand this? So that this 200,000 difference was coming to only 1.8 million debtors. So you have 5 million debtors, right? You have to embed this difference to the portfolio. You are taking decision to the portfolio. From 1.8 we are getting 0.2 difference. 0.2 difference, we have to convert that to the portfolio level. So then only you can take a, right? Keep in mind. So these are the common errors people are doing once you are doing auditing. The basic example. Right. Still, I didn't touch upon the calculation about activity, right? So what I said, you have to focus about perspective and expectation of the users once you are dealing with activity calculation, right? Activity calculation. Then how we are going to calculate this? That's the difficult part. Now we are going to calculate this material levels. Now we know the logic. Right? What's the reason we are having material levels? How we can take decision by using this. So then we have to arrive to a number. Then we have to decide that how we can arrive at this number. So we need to think that there are any guideline for this. There are any formula for this. Actually, we don't have such a formula given from common, the common guideline. So you have to calculate material level based on profitability, 10% of profit of organization. There's no such a guideline given in common terms. Right? In auditing standards, it's silent about this calculation. So it's a judgmental call from auditor. So then they are telling that you have to focus about the perspective and expectation of the stakeholders. It is so, based on that, you may have 3 different bases to calculate material levels. You have 3 different bases. So it may be earning base, may be activity base, may be capital base. That based on what? Expectation and perspective of the stakeholders. If you are focusing about this organization with a kind of a profitability angle, so we are keeping this company to earn profit. So then we can use earning base. I am focusing about this company, not about the earnings, because of the activity. If it is so, activity base. So I am not focusing on the activity. I am only focusing about what? Only the capital, saving of the capital. That's it. It is so activity based. So that depends on the expectation of the stakeholders. Majority of the stakeholders, key stakeholders, right? So most of the companies, most of the companies doing their calculation. So most of the companies, auditors are doing their calculation based on earning base. Why? So we have most of the companies, profitable companies, right? Profit-oriented companies. It is so we are focusing about earnings. So what are the whatever the startup companies? Startup companies. So at the initial stage, are you focusing about profit, earnings? No. That's about the activity, right? About the sales. So you are not focusing about the profitability. You are targeting the sales. You are targeting the activity. How about the non-profit making organizations, NGOs? But their target, earning, no. Activity. How we can expand that. They are focused on activity based. Right? So then, if you are in the break-even point, you are doing a business, you are starting a business. At the initial stage, you can't earn profit. You are in the break-even point. So then we have to focus about what? Only the revenue. Expand the revenue. Activity should be expanded, not the profit. You have to take some buyer, some other buyers, right? You have to read the market. So we have to focus about the activity, right? And then, so then you are moving to capital base. It is that is kind of a comparing, we are not focusing about the activity as well. So it's kind of a comparing, we are stagnant company. Already, we have taken all the profitability and we are keeping that company as a kind of a holding company. We don't have much operation, right? So we are keeping that some investment over this company, right? We are focusing about not the operation, not the profitability. So we keep our capital over this company. If it is so, we are using capital base. So that's purely based on the perspective and expectation of the stakeholder. So that's common, right? Perspective and expectation. So that if you are focusing about the earnings, stakeholders. Who are the stakeholders? Management, and then government, and then creditors, suppliers, staff members, and then other government-related other entities. They are focusing about their profitability. Is that true? Yes. Directors, they are focusing on profitability. Shareholders, yes. Government, yes. Tax profit. How about the tax profit? Are they earning tax profitability? So they are focusing about tax. Focusing about tax based on the taxable profit. Again, earnings, right? So then other regulated, are they profitable? Are they having solvency situation? So they can comply. Can they comply with the solvency margin rule, right? So then they are again checking the earning base. So the expectation towards the earnings, it is so we are using earning base. So in the economy, in the auditing environment, we have most of the companies. Let's say more than 90% audits based on the earning base. Right? The reason is what we have profitable, profit-making companies in the focus of the stakeholders to make profit. NGOs are doing it. They can become a business, are doing it. If you are starting a business, expectation is to make profit. If it is so, all the stakeholders focus about that. So then we have to use profitable basis, profit earning basis for calculation. That's why we have different numbers for under earning base. Different numbers. What are numbers? We can use gross margin, EBITDA, EBIT, normalized earning, and pre-tax income. So then EBIT means earning before interest and we can say that that's the operational profit, right? Normalized earnings. Normalized earnings. Normalized earnings क्या है? We are having earnings. We are going to normalize that. Understand? So then there's a kind of a unusual transaction, one-off transaction during the period. You have to normalize. So let's say before that we have kind of a government grant even during the period. Government may approve a kind of a grant to organization. You recognize that as a grant. So then all the conditions today, and that will impact to this year only. That benefit impact to this year only, not other years, right? So then you are going to recognize that as a gain for this year. You are using not the income approach, you are using the capital approach. Not capital approach, you are using the income approach. It means it will impact to the P&L. So then your earnings, your net profit may increase. So at the end of the day, your pre-tax income increase. So then your material level may be having higher value. Higher value. So then with compared to last year, it shows a significant increase. Significant increase. So then you have to justify that. So then you are going to use this material for all the numbers to take, right? So then what's the requirement? You can normalize that. You can remove that profit and you can reduce your earnings and you can calculate that. So then you may arrive with the kind of a material level if compared to the last year. You can easily compare, right? So for that, what you have to do? You have to normalize your earnings. If you are in a kind of an unusual year, there's kind of a one-off transaction. You have to deduct that and you have to calculate your earnings. So that you can call that that's adjusted profit, normalized profit. We have done some adjustment to the targeted profit, normalized profit. And then EBIT, BA. So the main advice is if you don't have pre-tax income, we have loss, you can go to these numbers. We have a loss, but you are calculating EBIT, you have a profit. So then you can go to that. So then you have EBIT also a loss. Let's say then you can go to gross margin. If you don't have a gross margin, so then why you are keeping this company? There's no point to keep this company. You don't have gross margin. So then you are focusing about not the earning. You are focusing what? Just the activity. Transfer to revenue. The main purpose of the keeping this business why? Just the activity, right? Come on, you don't have. So if you don't have revenue, it means you don't have transaction. You are keeping standard company. You are keeping that company just to kind of keeping the the even standard capital, right? You just have some investment here and there, FD and share investment. You don't have transaction during the period. It is activity based. You can decide whatever the case study once you are reading through that, you can decide what's the material basis. That may be a question to you. Decide your material level basis and justify that. First, you have to decide material basis that based on the expectation and perspective of the shareholders. I hope it's very clear for you all. If any questions, you can ask. People who are joining virtually, you all can ask questions. We are dealing with the kind of a complex area, so I can see only 2 people joining. Sena Ratna and some other. Hope your participation virtually, because these are kind of a big complex area, can be tested in exam. After getting your basic, after deciding your maturity basic, what we have to do? So let's say profit after tax 10 million. Profit after tax 10 million. So then you should calculate 3 different maturity levels. What is that? PM, PE, terminal value. You have to calculate these 3 numbers. Then what you have to do? So then you should have kind of a set of percentages. 5% of the maturity basis, 5%, or 2%, or 10%, or 0.2%. That is your judgment. That is based on your judgment. That was given from particular organizational instruction. Organizational instruction. So this was not guided by auditing standards. Guided in the sense, the exact guidance. The numbers were not given in auditing. The numbers, the calculation, the corridors were given through specific firm instruction. That means KPMG gap, PwC gap, EY gap, global audit methodology says we have to use this kind of a mechanism to calculate maturity levels. So then, specific instruction may be changed company to company. KPMG to PwC, PwC to EY, Deloitte, other local firms. Maybe in between these audit firms, the material calculation may be changed. These numbers may be changed. So then, in the exam, it won't be tested. So the maturity level is, please calculate your CM and TA and stat. Don't be a question, why? So then that will be changed time to time, right? So then this 5% of the basis, 2% of the basis, or 10% of the basis. You have to calculate PM, right? That will be decided based on the company instructions. That instruction depends on the company nature. Company nature. To evaluate that, we may have different factors. What are they? So this rate may be decided based on different factors. So sometimes they are having like this 5 to 3%, 2 to 1%, 10 to 8%, 0.2 to 0.5%. They have given corridor. You can use the upper end and the lower end. Upper end and the lower end. If you have a high risk, you have to use upper end or lower end. Lower end or upper end. Lower end. Why? High risk means you have to work hard. You have to work hard. High risk, how can you define that? To decide that, to decide this number, you have to evaluate different criteria. What are they? Your future targets. So are we going for IPO? Is there any serious governance related to borrowing facilities? Right? So then related party transaction related to this company. Is that a GH company or ungeared company? Right? So the composition of the stakeholders, how many orders are there? Is that a regulated company? Are we dealing with listed instruments in the organization? Is there any big deposit or customer related public interested transactions? That is insurance company always touching the public. Is that a finance or banking operation? We are accepting FDs and savings, right? Public interest is there. So likewise, you have to evaluate. Based on that, you are deciding this number. You are deciding this number. Based on that risk, you can decide higher end or lower end, right? Higher end or lower end. So then you can decide. Let's say we decide 1% of material basis from 10 million. 10 million. 1% means 1,000. 100,000 is the PM. So then PE, normally we are getting 75% or 50%. 75% or 50%. From PM, right? PE, let's say 50%, 50,000. So how we are going to decide 75 or 50? Based on the risk level. Based on the risk level. If it is a high risk company, so with comparison the last year corrected and uncorrected misstatements, and then according to the current situation, is that the initial audit or not? Based on that situation, the company nature, if it is a high risk client, we are using 50%. If it is a low risk client, we are using 50%. PE, right? That value, nominal value, then we are getting like 10% of PM. 5% of PM, right? Let's say 5,000. 5,000 maybe that value. So that may be changed, right? 5% of PM or 2% of PM, 3% of PM. You can change this based on that. There's no strict guideline to decide these percentages. So if you are audit trainee, audit manager work for EY, so the same calculation can't be used for KPMG. Don't expect that. Right? So then you have to check their guideline. That's different. So there's a kind of a argument in between two different firms. Right? Some situation, some group companies, right? Let's say John Keel's group or Haley's group. 50 companies are there, 25 companies were audited by KPMG, and then another 25 audited by EY. Okay. So then, end of the day, they have to calculate the consolidated numbers. Consolidated numbers. Because of that, to consolidation purpose, they have to, these people who are doing other 25 companies should report to other partners. Let's say consolidation will be done by KPMG, then EY should report to KPMG. So then KPMG should evaluate that console level maturity calculation. So then if they are using same maturity level, KPMG and EY, KPMG don't want to worry about the maturity level. But the different approaches, no. So then what they have to do? First they have to calculate group maturity level, that group maturity level, and then they have to calculate component maturity level as well. And they have to communicate that to the subordinate teams, component teams, right? So then this is the group maturity level. So that we have given a component maturity level to you to report us. Can you understand what it is? So then if you are the auditor for a group company, imagine you are audit manager for a group company, you may have two different materiality levels. So then you may have two PMs, two TEs given, right? What are they? Your individual level materiality calculation and the materiality calculation given from the group for group reporting purpose, right? So that called as component materiality level given by the group. So then what you are going to do? Are you going to do two audits? So the two materiality levels mean once you are selecting data sample, you have two different TE values. What you are going to use? Dekam use karna papers dekak karna hai. Not cost effective, right? Ekam gale purlo dene alagan purlo what you have to do? If you can use the lesser value. If you are in a group company, please use lesser number of calculation. So that we can't say that even group maturity level always higher than the individual maturity level. We can't expect that. Right? If you are the leading company in the organization, so let's say a group having PQR and 50 companies. PQR is the leading company. Right? So then all profit impact may be may come from the PQR company. If it is so, other companies are not the big players. Right? So then always group material level may be lesser than the company calculated material. Why? Your contribution may deviate from other subsidiary companies. So then in your company, your group, 5 companies are there. Only one company is the profit making company. When other 4 are not profit making companies. So how about the group profit? Group profit and the company profit. Company profit, it is 10,000. Group profit less than that. Why? You have to net it off this losses, right? So your company profit 10,000, group profit may be 5,000. Your group material calculation may be derived from that 5,000. So then group may inform you the lesser material level. Once you calculate it to individual material level, higher value. So then what you have to do? You have to use your lesser material for your audit purpose. Then you can use same working paper for both purposes. What's the both purposes? For individual financial statement plus for the group reporting. So the group reporter, KPMG ඇවිල්ලා කියන්නේ ඔයාලට කරලා දෙන අඩු material level එක. So then they can satisfy. So that you can see. So this is the material given. This is our material level. We have worked for your material level. So the both purpose can be used. So in other words, if they have given kind of a higher material level, but we have used our material level. They are කියන්නේ මගේ එකම use කරලා නැහැ කියලා. ඒතකොට එයාට කියන්න පුළුවන් ඔයාලට වඩා හොඳ එකක් තමයි use කරලා දෙන්න. ඔයාලට කියලා දෙන්න 5000 check කරන්න කියලා මම 2000 ඉඳලා check කරලා දෙන්න. So we are giving a higher comfort for you to report for group. So then this wordless. So they have to satisfy with our purpose. Because we have done the work according to a lesser material level. Right? So then my point is what? If if you are in a group company, the given maturity level should be evaluated and you have to decide your audit approach, right? Right. So then you understood what's the maturity level, what's the focus, and then how we are calculating that, what is the basis we are using, those things we discussed, right? Different scenarios. So what else? Last week I discussed within the audit also the maturity level should be changed. Why? Within the audit also maturity level should be changed. Sometimes you may start the interim audit, right? At the interim level, you may have a maturity level, maturity calculation. That maturity calculation may change to the year end. Why? First reason. Interim means you don't have final numbers, you don't have final pre-tax income, right? I hope that you have understanding about interim audit and the year-end audit. Because I discussed last week. Right? Interim means we have already completed 9 months. 9 months means we don't have the 3 months. So then we have to have a forecast, right? Based on the forecast, you are calculating numbers. And then what you have to do? So if you have, after having 3 months, you have real value. So you have to recalculate that. If there's a deviation, you have to take that deviation and you can decide what's the material you have to use. Another times, once you are having some differences, differences like misstatements or scope limitation, management agreeing to correct these things. Agreeing to correct these things. They are passing entries, right? If they pass entry to the income or expenses, the basis may be changed. Your metric calculation date should be tally with the year-end numbers, your audited numbers, right? So the numbers in the audited financial statement. So the audited financial statement number arrived with after adjusting some errors. So we have to adjust your metric calculation, right? Can you all understand this? Let's say year-end maturity calculation, pre-tax income, 2 million. 2 million, right? 2 million. Based on 2 million, you did audit procedures. You understood that debtor provision is overstated. The debtor provision may be understated. 0.5 million. 0.5 million. It is so. You are requested to correct this. Debtor provision understated. So what's the double entry you are going to pass now? So management entry to correct this. So according to the PE and LGD calculation, they have to mistake, right? So they understood that and they are going to correct this. What's the double entry? Debtor debit or credit. So the provision is understated. There should be higher value, right? Provision should be correct, credit, and debtor should be debit, right? Provision credit means P&L is impacted, right? So then this profit pre-tax income should be reduced to 1.5 million now. All calculations should be dependent on 1.5 million. Your PA, T, SAT, all these numbers will be impacted. So then you have to revisit your 27 time frame. If you are passing significant entries to your balances, you have to adjust your maturity levels. Keep in mind that within the audit also maturity levels can be changed. Finally, the maturity level numbers should be tallied with the year-end audited numbers. So that's a basic requirement taken by regulator or some other parties. So what they are doing is So they are getting, they are asking, are we using what's the basis we are using? So they are come up with thousands of questions, right? So they know the all standards and the expectation and everything. So they are asking, what's the basis you use for the metric calculation? We are telling. Yeah, we are using earning basis. If we are telling that we use the capital base, what they are asking. So this is profit making company. The expectation with the stakeholders to make profit. Why did you use capital base? Can we justify that? If we can't justify, that point onwards also changing. You have used a different materiality inconsistency in the materiality basis with the expectation of the stakeholders. So the materiality calculation is a failure. It's not correct. So then their expectation. So they are giving kind of a challenge to auditors. Challenge is they are evaluating the qualitative aspects. Obviously, they have to do that. That ensures the quality of audit process. So then once you are calculating, that pressure is there. If this audit transfer to the monitoring board, they will come up with that to question us. So then our maturity level should be perfect, should in line with the guideline, right? So then what they are doing is they are getting the answer, yes, we based on the earning base. So then what's the exact number you base on? You can say we based on pre-tax income. You can say that gross margin. They will ask, what's the reason you focus on gross margin? You have pre-tax income. So then if it is so, if you are having pre-tax income, you use gross margin, definitely you have justification. You should have justification. Otherwise, they will the challenge you. So whatever the basis, you can say this is the number. So then what they are doing? They are directly getting the number from the account and from the calculator and calculating that write it down. So based on that number, they are checking the procedures. So then that number should be used for your audit process. If there's a deviation, they will ask that. So here, this is the calculation. You have used different level. What's the logic behind that? You have not adjusted whatever the past double entries to whatever the basis you used. Keep in mind, whatever the maturity level you calculated at the interim stage should be readjusted according to the double entries you are passing. Right? It means in a one audit, maybe there may be 3-4 different maturity levels according to your changes. That's about maturity calculation. If you have any doubts or questions, ask. So we'll discuss later about this. So through a kind of a genuine calculation, and I will share some templates. So we can do kind of a real work, and then we can get some more understanding about this. Some of your colleagues having this understanding, talk to them. So that get clarify things from them. Right? If you have some more the doubts, can ask from me. Right. Off, that is clear for you. Then we can go to but other area. Most of the planning activities. Most of the planning activities completed, right? So we completed engagement letter and then audit team done, and individual assessment level risk assessment done, error risk control risk, and then the materiality calculation done. Right? So now we are supposed to start your audit procedures. Before that, you have to plan audit procedures. Plan audit procedures and execute. So the next step is that you have maturity levels, risk. You know the risk, right? Individual inherent risk plus control risk to the accession level, not to the balance level, not to the financial statement level, to the accession level. Right? You know that what I'm talking. Accession level means the financial statement level, balance sheet, P&L, the financial statement level. Balance means cash balance, PP balance, inventory balance, balance level. We have not concluded in that level. We went to the accession level. Cash balance, existence accession. Cash balance, valuation accession. PP balance, existence accession. PP balance, right and obligation accession, right? We are in accession level risk assessment we have completed. Now we have standing inventory numbers. So then we have a risk like this. We have a number like this. Now we are going to what? Design audit procedures. Audit procedures, right? We are going to plan audit procedures. What we are going to do to ensure this. So according to that target, we have 4 different. Basically, we have 2 audit procedures. Test of controls and substantive procedures. So if there's a question like how you can divide audit procedures, basically 2. Test of controls and substantive procedures. We may have some other procedures, other general audit procedures plus, like JE testing, maybe some other procedures. So these are the basic audit procedures you have to follow. You have to decide, you have to plan this according to what? Calculated risk plus developer. අපේ කියන්නේ මට නෙමෙයි ජෙනිෆර්ට තමයි කියන්නේ. ඒකත් ඇත්තට හොඳ නෑ හොඳ. අපිට කියන තුන කන්සර්න් කියනවා. assignment කරන්න ඉන්නවා. ඒක තුන කවුද දන්නේ? කට්ටියත් ඉන්නවා එහෙම. අපිට හිතන්නේ කට්ටියම කියන්නේ. එහෙම කට්ටිය ඉන්නවා. virtual ද මේකද දන්නේ නැහැ. I know that this is a extension batch, no? We have to treat you all in a different, different spoon, right? Get mala experience, and anywhere you are in a job, so we have to flexible. The mama assignment there, and Kodilama in the common. Why under calling assignment is submit the they can online block submit otherwise they are not doing. For you all, I will give like 2 days only there. Assignment take a live කරන්නත් වෙනවා ටර්නමන්ට් කරන්න එවලෝ නම් වාට යන්න පුළුවන් ඊළා කරන්න පුළුවන් අද රැට හරි හෙට රැට හරි කරන්න බැරි නම් ප්‍රශ්නයක් නෙමෙයි so දැන් එහෙම මොකද කිව්වෙත් නෑ මම හිතන්නේ කියලා තියෙනවා මේ assignment දෙනවා එහෙම දෙනවා කියලා තියෙනවා not good they are telling that there's a huge concern from the students here අර මේ ප්‍රශ්නේ කියන්න ඕන කෙනාට මේ ප්‍රශ්නේ කියන්නේ. ඒකේ ප්‍රශ්නේ දෙන්නේ. ඒක කොහොමද අපි සෞදේශයේ ප්‍රශ්නයක් නෙනේ. ප්‍රශ්නේ නැහැ. මෙච්චර flexible සලකෙන්නේ උද එක්කෝ අපේ so we have WhatsApp group. You can put a questions are you giving continuous assignment or something like that. Or you can ask your colleagues. මේ batch checking coordinator කෙනෙක් ඉන්නවා. එයාට කියලා ඕනම දෙයක් flexible කරන්න. assignment එකක් වුණා. deadline එක නිසා. We can't give excuses, right? You have to earn the degree, no? If you get assignment දෙන්නේ වාගේ penalize කරන්න දෙන්නේ. The purpose is we have to give that knowledge to you all. මොකද කියන්නේ හැම වෙලේම the degree certificate take the degree rate so we have to earn the real value. So the first day onwards I told you learn this subject the sake of getting the pass or degree or not like that. You may be an auditor or auditee in near future. So that time you can use this. Take it focus kar. දැන් අරම කිව්වම මේ මොන බැට් එකේද concern එකක් huge concern කියලා ඒක ඇති message එක කියලා concern එකේ කාගෙන්ද කොහෙන්ද නැහැ එහෙම concern එකක් තියෙනවා you can directly talk to the lecture මේකේවත් තමයි හැම එකේම පුළුවන් ඒ lecture එක කියන lecture අනුසය කියන්නේ lecture ආසයි කියන්නේ response දැන් ඒකවල ඕන නම් ඉල්ලුවම අනිවාර්යෙන් දෙනවා නැතුව කරන්න පුළුවන්. especially audit lecture කරන්නේ hobby එකට කට්ටිය එහෙම කරාම දුක හිතෙනවා. ඒ කියන්නේ concern මම තමයි flexible විදියට කරනවා කියලා මම කියන්නේ. අනිත් ළමයින්ට flexible. මොනවාරි ප්‍රශ්න තිබුණොත් තව assignment එකක් දීලා හරි ඒක virtual කරන්න හරි physical කරන්නම කියන සමහර වෙලාවට. දැන් මේ පැත්තෙන් physical කරන්න බෑ අපිට. presentation you can do virtually. So that flexibility is there. If you can't, you have a kind of the commitment from that day, already negative. The data man having the wedding negative sari having presentation again. So we are not that much inhuman. But we have some controls. So you can flexible. If you can communicate to the right person. Or job get him. Tata Mate security Tangani talk to the right person. If you want the promotion, talk to your boss. That's it. But a promotion, Nana, give and the poster by now again, he'll give a poster. Right? You have to be very professional. Learn that first. Then we can get a degree. Jennifer told me, that's the first time in my lecturing history. Jennifer told me about how you're doing assignments and design. It's not good to them, you know. If you have told me, then question should go to them. That's obvious. Then you have to talk to them. The admin related things, right? So if you have complaint, so that if I'm not doing correct and these things can be informed. Just small things. And then talk to each other, follow to me, then we can easily solve it out. Then they are busy and they are it's not a blame to me, right? So they know who I am. I know who they are. So then it's not nice, right? So if some others are telling like that, so it's not good. So then we can manage these things. But we have to use that correct protocols and communicate that. Then only if I'm doing some the very strict activities, we have to do that and this I'm giving the out of the syllabus assignments. If you can't do that, something it. So this telling something else and giving something else, giving strict inhuman deadline, can go on it. Okay. Yeah, I know, right? Wow, Mama, I'm one of the little I feel a minute. You can get a team make it, remember, I feel them up the current People who are joining virtually, you can get a break and have your breakfast. Come again.
Excuse me, sir.
And we start. So then, people who are joining virtually, so we are going to start. We are discussing about the materiality, and we have done with the risk assessment. Now we are going to design the other procedures we are going to follow. So that is the basic approach. Whatever the target you have, whatever the for the stat exam also same. So then you have to assess the risk and you have to decide procedures. What's the risk? So that you may get failed the exam. You may not receive the degree. So that is the risk, right? So then we assess that risk, and then we have to assess that risk to the overall degree level and the subject level. Yes. So the subject wise you need to analyze, assess the risk. Subject wise as well as not, you can't stop with the subject level. You have to analyze the topic level. Why? Yes, definitely. You have to put your weightage the topic level. So the under audit and assurance, subject level, once coming to the material level calculation, topic level. So the what is the risk? The risk is not to understand the material level calculation. So then you have to evaluate that risk to the degree, right? So then you have to take action over that. So then you are deciding your activities for the degree based on the risk assessment. What's the risk assessment? Degree level risk assessment, subject level risk assessment, and then topic level risk assessment. So then we have financial statements, balances, and assumptions. Right? Now we have the risk. We know the risk. So then what you have to do? You have to decide what is procedures. මොනවද කරන්න ඕනේ? lectures එන්න ඕනේ. මොකද කරන්න ඕනේ? So you have to read this content. You have to work hard. So the auditing is kind of a writing subject. So you have to read the things and you have to write physically, right? So then understanding the question is the difficult part. Not like corporate reporting. So the corporate reporting is a kind of no factual answers are there. We have white and black answers. Black and white answers are there. But here we have gray answer. So then not the white, not the black, it may be gray. So that kind of a justification should be there. So auditing, right? So then we have to understand the question and we have to write. So then what we have to do? We have to practice. So then that practice, so you need to do past papers, you need to write, and those things may be the procedures you have to address this. So then like auditor, what you have to do? We have to plan your procedures. That plan may be changed to student to student, auditor to auditor, balance to balance. You can't use the same plan for something research subject, right? Marketing subject. The plan should be specific to what? Auditing subject. The plan used for auditing subject can't be used for corporate reporting. The plan used for cash and cash equivalent can't be used for PP&E. A different approach. The ethics are here. And then, so we are planning audit procedures, right? Wait and see others are here. I hope the people who are joining virtually, you are okay. Are we audible? Hope so.
Yes, sir.
Right. So then we evaluated audit risk and then we calculated audit material. Now we are going to decide audit procedures, right? What I was discussing here, whatever the task you are doing, whatever the personal objective, whatever the activity you are targeting, you have to assess that risk, right? But we were discussing about the achieving the STAT degree, maybe a task. So we evaluate the risk over that. You can calculate the risk to achieve overall degree level risk, whether you can earn that degree or not. And then subject level risk, whether I can pass this subject level risk. You can't stop with that level. You can go to audit and assurance subject, and I pass this. What should I do? You have to go to the topic level, material calculation, risk assessment, right? So can I understand this? That is the topic level risk. So then you assess the risk and you have to take actions. So the action is the responses, right? Auditors also same. Balance sheet level, then PP&E balance, existing accession. Accession level risk should be evaluated. And accordingly, we have to decide procedures. Accordingly, we have to decide what you should do for achieve the degree and understand the audit and assurance, understand the material calculation. So then you can use this slide deck, you can refer the auditing standard, you can talk to your colleague, and you can ask some the question from some audit manager. You can use different approaches to understand material calculation, to understand audit and assurance, to pass the degree. So then you have to perform procedures, plan procedures according to the risk. As I said, you can't use the same approach for audit and assurance to the corporate reporting to the marketing. Different approaches should be there. So likewise, cash and bank should be used different approach, different procedures, different risk level. PP&E, different approach, different procedures. Likewise, according to the assessed risk, you are going to design audit procedures. Audit procedures can be divided into basically test of control plus substantive procedures. Testing controls plus substantive procedures. Keep in mind. And then general audit procedures, JE testing. General audit procedures, very easy. Post balance sheet review, and then board minutes review. Journal, so the related party testing, going concern evaluation. So then we have to do regulatory reporting, regulatory compliance. Those things will be evaluated under other general procedures, right? JE testing is a mandated procedure required from auditing standards. So we have to review, analyze and test journal entries in the organization. So it's another testing. So which relate to balances. So then you have to plan these procedures to achieve the audit objective. You plan this. Then you can understand what it is. Test of controls, substantive procedures, test of controls. In a control, we have three different stages. Control, we had three different stages. What are they? Design, then implementation, and then operation. So under test of control, what you are going to test? The operation. Right? Where did you test this? Design and implementation. Design and implementation. Design and we tested that under walking test. Walkthrough test. Right. still you are not familiar with this walkthrough test. So after understanding this whole planning and risk assessment, I will give some, the basic understanding about the whole process then, right? So then only you can understand what's the flow, what you are going to do, what's a walkthrough, and what's DOC. You can have kind of a clear picture. So I'll give kind of a basic, discussion about the audit process. After doing this basic step on the planning and schedule. So then you can link all those things to the audit process. With that understanding, we are going to execute audit steps, right? Procedures. Keep in mind. So this slide, other than this planning audit procedures, is a key steps you have to do. Other than that, whatever the rest of the parts, key areas we need to focus at the planning stage, very basic things. First one, whether we are going to get internal auditor support or other audit experts, management experts, right? Internal auditors, or we have audit experts, management experts. Internal auditors, and then we are discussing audit here. What do you mean by internal auditors? Any understanding? Any idea? Internal audit versus external audit. We are discussing here external audit. Internal audit. Yeah. They are focusing about internal controls, right? Internal control frame. So is that mandatory? Not actually, not mandatory. So that is mandatory to have an audit committee in a listed company. Right? Listing rules, right? No need to have internal audit. So then internal audit may be kind of a part, let's say a specific industry may be a requirement. Otherwise, in common rule, so there's no specific guideline for the guideline for internal audit. It's up to you to decide as a management whether we are having internal audit or not. Internal auditor is a employee in the organization. What their target is, so they are evaluating internal control mechanism. They are going to rectify that. There's a third level of defense. In the organization, we have defensive levels. First level of defense, who is that? At the management, the CFO, operational managers, and all. So they have to correct defense, prevent misstatements. First level of defense. Second level of defense, who are they? Risk and compliance. Second level of defense. Third level of defense, internal auditors. Fourth level of defense, external auditors. So the organization so they have to have this control mechanism in the organization. 4 different levels. So then only we should have proper governance aspect, proper internal control frame. So then if there's a misstatement, firstly what we have to do, the management person they have to correct. Management side they have to identify it and correct it. Right? So then if they can't do that, what they are doing, then again what they are doing. So then laws and risk department and the legal department may highlight that and they will correct. They will recommend to correct, right? Investigation, rules and compliance, right? They will correct it. Local standards are there. So then they will review that. Local reviews are there, file reviews. Operational level file reviews are there. So that's second level of defense. Internal audit, third level of defense. So then they will look at that and they will recommend to correct. So then whatever the remaining things will go to the external auditor. Right? Once they are having the external audit, if we have these 3 different levels, they are free to do the audit. They are very easy to come through the audit. Why? They have a proper mechanism in the organization. First level, second level, third level. And then they have that capability. They have that opportunity to use internal auditors reports. to assess the risk, right? So then they can decide whether we are using internal auditor support or not. To decide that, they are doing some evaluation, right? Whether internal auditors are independent. Are there internal auditors reporting to CFO? If it is so, it's not independent, right? Are there internal auditor reporting to CEO? It's not independent. That internal audit team should directly report to the audit committee or region or the group, not CEO. CEO is a dotted line reporting. Just the status, right? So we are auditing the internal control set by CEO and the team. CEO and the team is the management, right? We are auditing that the internal audit should be independent. They have competent IT and subject matter, and then whatever the laws and regulations. So that we should have a proper competent internal audit team, right? So the based on that we can decide as an external auditor whether we are using internal auditor support or not. In the company side, there may be management expert. So in the auditor side, they can use audit experts, tax experts, IT experts. They can use for their audit team. That's up to them to decide according to the risk. If there's a high risk related evaluation, what we have to do? We have to take an valuation expense. If we are dealing with real estate company, there may be significant valuation. Right? If we are dealing with agricultural asset industry, biological asset valuation, biological asset, consumer biological asset, there may be different biological assets. So they have to do that valuation. To do that valuation, we should have experts. Right? Should have experts. So that's a part we should focus. We have separate standard as well, SLA US 620. Whether we are using internal auditor support and audit expert support. Right? Audit expert support 610, internal auditor support 620. Keep in mind that, right? So I will come to these areas later. So then I am focusing about related party. Related party is what? Related party. We have a accounting standard as well as auditing standard. Accounting standard 24. Auditing standard 550. Why do we have this kind of a standard? Related party concept. Why we are having accounting standards for particular areas? Are we having a doubt about that? So some of the areas we have particular standards. Some of the areas we don't have. Inventory we have 2. 16 PP&E we have standard. Cash flow we have standard. Cash percent we don't have standard. It's a financial instrument. We can get support from that as revenue we have standard. And then deferred tax we have. Segmental we have. Earning per share we have. Related party transaction we have. Areas that rent expense the standard salaries, other assets are there. So we don't have a separate standard for them. Why do we have a standard for some areas? Reason is, so whatever the complexity, whatever the options they have, so then people can use different options, right? So then they can play around these numbers, play around these options. For that, what we have to do? We should have a proper guideline, segmental information. How we are going to segment, how we can identify operating segment versus reportable segment. So then, if we don't have standard, people may report whatever things they want. So then the standard is very clear. They have given quantitative threshold there, right, to report as segmental information. Likewise, if there's a kind of complex area, we should have a standard. Otherwise, we can't keep the consistency. We can't compare each other. So the stakeholders should have that right to, should have that facility to compare numbers. To compare numbers, we should have a proper standard. That's why we have standard. How about related party? Yes, it's a complex area. related party, recognition, measurement plus disclosure. All are complex. All are complex. So that from management side, they should have a process to recognize related parties. And then whatever the related parties, whatever the transaction should be measured correctly and all should be disclosed correctly. Why? This is a relevant information to stakeholders. So then related party means they may be doing kind of a the biasness. So the related party transaction you can't get the fair value. It's not the the what do you call that? What it means to the fair value? To be an orderly transaction between market participants. Orderly transaction. Orderly transaction. What's the definition? Orderly transaction. So the transaction, the buying party and the selling party should be a genuine party with the proper understanding about the transaction, right? So there's the knowledgeable willing parties should be there. There can't be a kind of a pressure to enter the transaction. The fair value should be there. In a related party transaction, you can't get the fair value. So then you are giving a weightage to that relation actually. You are giving a kind of a discount for the relation. If it is so, you don't have the fair value. So then in the organization, you may have the material fair, the related party transaction, you are ending with the loss. So then if you have serious related party transaction, overall profit may not be the genuine profit. So then tax department, what they are doing? They are come up with the transfer pricing regulation. If you have done more related parties, you have to add a margin over that. You are not showing the correct price. Each and every transaction happen with a what? Discount. You have given serious significant discount for related parties. If this or this is not the real profit, you have tax more than that. That's about transfer pricing regulation, right? If you have, they have given kind of a threshold. If you are exceeding that threshold, they will apply that transfer pricing adjustment, right? So then related party is a core area as auditor we have to focus. So then we have to plan our procedures, we have to assess the risk, plan and perform, right? And then going concern. What it means to you? Going concern. So this is the kind of a not a standard. This talks about that case one, and it's a kind of an assumption. Right? Kind of assumptions used by the management. So they are giving financial statement by based on this going concern assumption. So then we assume that the company may survive, operate for foreseeable future. So based on that understanding, we are doing current accounting practices. So that if you don't have that going concern comfortable, so the the comfort about the company, so that we can't use, if we can, if you can't assume that, you can't use non-current liability, non-current asset. So that means you are using those for the long run. Right? So then if you don't have that going concern capability, you can't come to that assumption. So then you have to prepare the financial statement based on breakup basis financial statement. Breakup basis financial statement. You don't have, the book value. All numbers should be market value, right? And then you don't have current and non-current asset liabilities. All are current asset, current liabilities, right? That's breakup basis. You are going to liquidate the company. You are going to wind it up the company. So for long run, there won't be a company, right? So they have a going concern issue. So then as auditor, that assumption should be validated. If there's an indication, challenge the going concern, you have to evaluate that. Right? So then for that, you have to perform procedures. There's a risk, right? Are there risks? Yes, there's a risk. What's the risk? Management telling that this company having going concern. But you have a challenge. What is that? Whether this company have that going concern or not. That's a challenge. For that, what you have to do? you have to perform audit procedures to test that. So some of the companies, obviously, they have going concern, no doubt. It may be profitable or market, the market space, market, they are the leading firm, right? So then the reputation also high. So they are earning the margin also high level margin. And they are not kind of dependent on borrowings. Stability is there. So there's no doubt about going concern, right? Then how about loss-making company? Kind of a company depending on one buyer, one seller, one supplier. So the one critical, employee. So that we are producing cake to the market. So we have a kind of a chef who is an expert on making cake. So he's in around 80s, age 80, 85. So after his lifespan, we don't have any succession chef. It means creating a going concern out. So that we are depending on only one staff member. Likewise, evaluate that. They are getting indication of going concern. So as auditor, you have to ensure the going concern assumption put by the management to the test. For that, you have to perform audit procedures. For that, you have to plan. There's a risk. You should have a plan. So then, audit procedures related to going concern ability. You should have a plan. And then, accounting estimates. Accounting estimates. For example, accounting estimates. Annual estimates, accounting estimates. The estimate related to the standard, that is 7, right? And Indian asset, Indian liabilities. Take for example. Yes, promotion for our yes. As an example. Yes. Provision under the balance to be provision, depreciation, useful lifetime, residual value, gratuity, balance sheet at 90% provision. And right of use asset, commercial borrowing rate, and then revenue returns, provision for returns, estimates. And accrued expense also in other terms estimate. Yeah, accruing expense based on the estimate. So then estimate is a estimate means so there's no factual, the exact number. We are doing that estimate forecasted exact number. So then we may have different numbers. To do proper estimate, we should have proper justification, judgment, and then assumption should be very valid. Otherwise, the management can play around this estimate by using inputs. By using 2-3 different inputs, you can change your profit. Biological asset valuation. So then, if you are using revaluation model for what? EPN estimate. Borrowing cost, deferred tax estimate. Recoverability of deferred tax asset estimate. Goodwill calculation, impairment of the goodwill estimate. So those are yes. So then this estimate auditing is a kind of a difficult part. So firstly, what you have to do as auditors, this estimate should be evaluated. So the risk level should be identified as an estimate level, overall level. So there may be high risk estimate, medium risk estimates, low risk estimates. You have to do that analysis. Based on that, you have to identify the process of the estimate. And then you have to evaluate the risk, the accession level risk there. Overall estimate level risk and the accession level risk. Right? So you have to identify the process and the controls, and you have to perform all the procedures over the separate estimates. Right? So that should be a part of your audit plan. It should be a critical part of your risk assessment and as well as your audit procedures, right? So that's about planning and risk assessment. So these three, four topics, I will explain again. Don't worry about that. What is that? I quickly went through these things. What is that? Internal and external expert plus internal auditors, right? And then going concern, related parties, estimates. So those things I discussed quickly. So we'll go through one by one and have a proper plan. Okay. So after doing this plan, we have come up with the final planning document. That is called planning document, planning memorandum, right? Audit planning, summary. So you can use different words. Summary review memorandum. Summary review memorandum. Summary of audit plan. Audit summary memorandum. Audit planning memorandum. Likewise, you can use different terminologies. Basically, it should contain what's the risk level, what's the management level, company nature, previously audit findings, and then basic plan for the BC audit. Plan with audit procedures. Right? So that is the key document we are preparing at the planning stage. But that audit plan, planning document should be contained with audit strategy as well as audit procedures. Right? So that's about basically the planning and risk assessment. Today I want to give kind of a basic understanding about whatever the things we discussed and where we are, what we are going to do. Now I know that we have kind of a understanding about overall audit process and planning activities. Now we are yet to start audit procedures. Before that, we should have a pure understanding about what we are going to do. Now here and there we know. We started audit, we accept audit, we created the engagement letter. So we calculated material calculation, and then we identify what are the risk areas, internal risk, control risk, and then we plan audit procedures. And likewise, we have kind of a topic-wise understanding. Now we are going to start audit. To do that, we should have proper understanding more than that. Where we are, what we are going to do. Now I'm going to do that. What we are going to do, what's the steps we followed, and where we are now. Right? So I hope you are dual attention, physical plus mental. Right? Take a otherwise we can't use the whiteboard. If we are using whiteboard, the people who are joining virtually, they can't see. We can do is to open this PowerPoint. Cannot see the screen. This clear. Yes. People who are joining virtually cannot see this thing.
Yes, sir. We can see.
Right. So I am doing kind of a basic workflow understanding about where we are now, right? We basically started audit. How you say? Add financial statements, 5 elements, right? So I'm not going to explain that. This 5 element consisted with 3 different things. Transactions, disclosures, and account balances, and then transactions. So these 5 elements consisted with disclosures and account balances. We understood that these account balances and disclosures came because of transactions, right? So transactions. And then we call that first draft financials. Draft financials. Draft financials. Now we are going to add an adjective of audited financial statement. Audited financial statement. Audit report add to now audited financial statement. Draft financial statement for audit report, audited financial statement. This is the output we are going to get. We are going to get. So then my question, can we do as a whole audit this financial statement and can we get this answer quickly? Can't get as one go, we can't get. So we have audited financial statement, I'm a chartered accountant, can I sign? So it's audited financial statement. You can't do in a quick time. It's a continuous process. So then for that, what we did, we accept the client, we accept the engagement, and then prepare engagement letter and selected audit team, and then now we are going to start the audit. To audit this financial statement, to add this adjective, right? To add this adjective. To do that, we calculated materiality level, right? Based on draft numbers, draft financial statement numbers, let's say pre-tax income, calculated materiality levels. BM, CE, that. You can write these things, right?
PowerPoint account.
Yeah.
Paint.
Paint. That paint. That's right. Right. Then draft FS, going to plus audit report, audited FS. To do that, what we did, added acceptance, engagement acceptance, LOE, and then 15. Understand the business, right? Understand the business. Calculate activity levels. Levels. PMP is that, right? Then calculated material levels. So then now we are going to identify what? What are the next step? What are the significant accounts and disclosures? Significant accounts and disclosures. Why? We are going to audit this. This consists of three different elements: account balances, disclosures, and transactions. We are going to identify what are the significant accounts and disclosures. So then after doing these things, we are moving to a very critical step. What is that? Identification of significant accounts and significant disclosures. Why? We can't audit all the accounts and all the disclosures. We have to select what are the significant. So then to decide that significantly, it's relevant for stakeholders' decisions. So we have to think about stakeholders. For that, we have already calculated something. Based on that, based on expectation and perspective of shareholders, stakeholders, we calculated maturity levels. We can use this maturity level to decide significant account and significant disclosures. So we have many accounts, many disclosures. Related party, earning per share, contingent liability, contingent asset, fair value. Different disclosures are there. Different numbers are there. Can you repeat numbers? Do I need to repeat? Okay. Depreciation, accumulated expenses, cash flow, equity, dividend, salaries, donation, different accounts are there. So we are going to identify what are the significant account and significant disclosure. So then, as auditor, I am asking a question: are you going to test all the accounts and all the disclosures? You are going to test significant account and significant disclosure. We have to select those things first. And then what we have to do? So let's say we identify these are the significant accounts and significant issues. Let's say depreciation. Depreciation. Cost. Related depreciation. We have done these steps and we are going to significant account and disclose, right? So then to do this, we are using PMPE set. Basically, we can say once you are doing significant account and disclosure, you can select more than PE balances. That's a basic concept you can use to identify significant accounts and disclosure. What is that? More than PE balances. What we are discussing tracking maturity, we understood that PE is the operational level maturity. Transaction level maturity. So the ones you are doing what is field work, PE is the point you are using. So then if you are taking a decision about significant account and disclosure, you have to take PE. You can basically decide more than PE balances. More than tolerable balances, significant to the audit. So the can use could be there. Is there. We have to evaluate qualitative aspects, regulatory aspect, that tax related entries, related party transactions, right? And then what are the accounts? You are having many debit credit entries, estimated related entries. So you have to evaluate each and every criteria and decide what are the significant accounts and disclosure for this audit. I will give later that criteria, right? Don't worry about that. So the ones who are deciding what are the significant accounts, basically what should we do? As auditor, we have to select what are the significant accounts, the stakeholders. After issuing this audit report, audited financial statement, they are taking decisions. Once they are taking decisions, whatever the balances and disclosure impact to them, we should be selected as significant account and disclosure, right? So for that, we have calculated a benchmark. This benchmark dependent on what? Based on what? Expectation and perspective of stakeholders, right? So then we can use to select that. And other than that, we have to look at other. So based on that, so we have some other things. Based on that, we are selecting what? Some balances, significant accounts and balances, disclosure, right? What are they? Depreciation, cost of PPE, revaluation gain, disposal gain, salaries, EPF, EPF, bonus, gratuity. Some other disclosures, fair value disclosure, related party disclosure, and then earning per share disclosure, contingent asset disclosure. Disclosures are there. We are selecting what are the significant accounts and what are the significant disclosures we are going to audit. Based on what? This criteria. Do we need to select that? Yes, we have to select. Why? We are doing risk-based auditing. We can't audit each and every balance. We are not giving a certificate. We have to select what are the significant things. So from this financial statement, let's say financial statement 100%. We selected whatever the significant things to audit. It may be 75%. Other things not significant. Small things. This represent all 100%. We are going to test this. So this represent only account balances and disclosures. This account balances and disclosures derived from what? Transaction. Next step. Next step is transactions. So we have to take account balances, disclosures, and account balances, disclosures, and transactions. Now we have selected account balances and disclosures. Now we are going to select what? Other aspect, transactions. Transactions. So the transaction, can we select what are significant transactions? Can we select significant transactions? Very difficult, right? In audit, we may have, in a company, we may have millions of transactions. Millions of transactions. In the bank, how many transactions? In one ATM, there may be more than 1 million transactions in a year, right? How many ATMs are there? Those who cash withdrawal and check deposit and all. Cash deposit, right? Other than that, how many transactions are there? So then, can we select significant transaction? So the auditor has a challenge to select significant transaction. But we selected significant accounts and significant disclosures. Why? We can count these things. From financial statement, we can directly capture these things easily. So now we have a challenge. What we are going to do now? According to the characteristics, so that we have different transactions. Different transactions. So then, different transactions. Millions of transactions. What we are going to do? Based on the similar characteristics, we are going to class this, cluster this. So then, among the transactions relating to payroll. Some of the transaction relating to PP. Some of the transaction relating to revenue. Some of the transaction related to purchases. Right? We can say that significant. These are classes of transaction, right? The classes of transaction. We have different classes. Now we are going to identify what are the significant classes of transaction. Whether this is significant or not. Significant classes of transaction. Are we going to audit all the classes of transaction? No, we are not going to audit all the classes of transaction. We have different classes. We are going to select what are the significant classes of transaction. Significant classes of transaction. Significant class of transaction, we can say is codes. Is a common word we are using in auditing. Is codes. Significant classes of transaction. We have classes of transaction. We have to select significant classes of transaction. Once you are selecting significant class of transaction, you have to use a kind of a strategy, kind of a technique. So can you say that how many significant class of transaction identify? How many classes you have identified? We can't say. Depends on the nature. Depends on the manager. Depends on the classification, right? What you understand? Well, basically 5 scores identify karagan. You have to, at least minimum you have to identify 5 scores. Significant class of transaction. You can't say that. Sometimes PPE here is a score. Sometimes depreciation calculation may be a separate score. For telco compare. Revenue here is a score. Sometimes cash receipt and payment may be a score. Revenue from one stream may be a score. So the FD and saving is one score. Sometimes FD is a separate score, saving is a separate score. It depends. Right? Depend on the classes you identify. What again class cannot do one thing. Up to you to decide characteristics. What I mean. Class again the lamai. It would one thing. What is connected here with class again lamai would you can base on the gender. May gain with an class they come together. Age base with an region like a base with an approval. What can be Palam, what down south. So different classes. It's up to you to decide. So then you can't give an exact answer. How many classes you have to identify as significant scores? You don't have an answer. It's up to you to decide that. It's based on the characteristic, based on the company you are analyzing, right? But there's a guideline, there's a guidance. This is very critical. But that guidance. After you identify all the significant class of transaction, all the scores, as a basic guideline, you have to cover all the significant accounts and disclosure. And make a table. So you have identified, you have many disclosures and many accounts. You identify what are the significant accounts and disclosures. Right? So these significant accounts and disclosures came because of transaction. Before you are auditing, you should know the transaction first. You have to go through the transaction. That's why you are selecting codes, right? After you are identifying scores, if you have missed something here, you can't understand that. What's the basic requirement? After you are identifying scores, all the significant accounts and disclosures should be covered. Then only you can understand what it is. I hope that you are getting what I'm saying here. So then the depreciation and post PP&E revenue disposal, these things can be linked to PPE. Can do that. You can see some similarity, depreciation, cost of PPE, revaluation gain, disposal gain. You feel that it's related to PPE related transactions. Are you okay, right? So how about salaries, EPN, ETFM, bonuses and gratuity? You can link to payroll. Likewise, what you can do, you can have a kind of a list, right? You can link with the relevant code. Relevant code. So then this significant accounts came because of this code, right? Because of this transaction. Are you okay? Because of this transaction, this code came to the balance sheet P&L. Now we have significant accounts and significant scores. Scores, right? Significant accounts and scores identification and score identification. Right? We identify scores, we identify significant accounts and scores. Then next step is what? Next step, very critical step. What is that? We are going to do what? Mono කියලා හිතෙන්නේ. virtual කට්ටිය මොනවා කියලාද හිතෙන්නේ? virtual ඉන්නවද දන්නේ නැහැ. දැන් ගිහින්ද දන්නේ නැහැ. assignment එකක් දෙන්න ඕන දෙයි කියලා බය ගිහිල්ලා දන්නේ නැහැ.
So bus sizing this
Okay.
down
Right. So at the next step, we identify significant account and disclosure, identify scores. Now we are going to do what? Lanka classification board and procedure. On the current entity. On the current. On the current entity. So we are going to do walkthrough. What's the next step? Next step is the walkthrough test. Walkthrough. Walkthrough. Why we are doing walkthrough? Main purpose. Understand the process. Understand the process is what? Design and implementation effectiveness. Controls, we have three different stages. As I said, Galle, design, implementation, and operation. Right? So we are going to test two aspects, design and implementation from walkthrough. Design and implementation, keep in mind, we are focusing design and implementation effectiveness of the control. Design and implementation of the controls. We are going to do walkthrough for payroll, PP&E, revenue, and this. Once you are doing this walkthrough, you are covering this PPE process. And then what's your ultimate objective? You are covering how you are getting these numbers to the financial statement, right? So these numbers appears in the financial statement because of this process. We are going to study kind of a walkthrough test. Walkthrough test. We are walking through the process with evidence, with the transaction support source documents, approvals, initiation, recording, and processing process. We are going through. We are checking everything. We understand. Abhi ekak sample එක කොහොමද select කරගන්නේ? අපි කියන auditing එක sample එක select කරගන්න. නේද? So we are asking to select sample from company. Why? So එයාට sample එක select කරලා මෙයා මොකද කරන්නේ? එයා හොඳම එක තමයි අපිට දෙන්නේ. අපිටත් ඕන මොකද්ද? එවෙලට හොඳම එක බලන්න තමයි. So the reason එක. අපි තාම ඉන්නේ identification stage එකේ design and implementation බලන්න. ටිකක් අඩු එකක් බලාගත්තොත් අපිට වැඩක් නැහැ. So we want to see the perfect one. Sometimes you can ask the sample from them to see that. So you are identifying design and implementation of the control. So then after you complete this walkthrough test for each and every 6 scores, are you having comfort about whatever the numbers and disclosures you are going to audit has been covered? You have a few understanding. Yes, we have understanding. Why? We had a rule. Each and every significant account and disclosure should represent one what? Each and every score you have to do a walkthrough. After you doing the walkthrough, you know the design and implementation effectiveness of the control. It means whatever the identified significant account and disclosure, you know how it comes to the balance sheet and the P&L, to the disclosures. You know the process, but you know the design and implementation of the score. Because all significant account and disclosure link to a one spot. Right? So you are doing walkthrough for spot basis. After covering all the scores, we have that overall understanding of the company. Overall understanding of the company means whatever the significant areas, right? Whatever the 75%. You are not taking 100% because you are doing on assurance, not a certificate. School එකක් වගේ නේ. වාසාමාන්‍යයෙන් ස්කූල් එකක් දෙන්නේ. තේරම ස්කූල් එකේ ඉන්න ළමයි තේරම එකට දාලා උගන්වන්න පුළුවන් අපිට. බෑන්නේ බැච් හතරෙම ළමයි දැන් අමුතු සද්දක් දෙනවා. එකට දාලා උගන්වන්න. ඒකට ඔයාලා ඉන්නේ එක්සෙප්ෂන් අරගෙන ආපු බැච් එක. ඔයාලට දෙන්න අමාරුයි සද්දත් එක්ක නේ. මේ මොකද්ද කියලා හිතන එකට දාලා උගන්වන්න අමාරුයි. grade 1 ළමයිකුයි A level ළමයිකුයි එක පන්ති ඉගෙන ගන්න අමාරුයි. this level දෙකක්. නේද? ඉතින් හැම ළමයකටම ක්ලාස් එකක් තියෙන්න ඕනද? ඔව් ක්ලාස් එකක් නැති ළමයි ඉන්න බෑ ඉස්කෝලේ නේ. එහෙනම් හැම ළමයම හැම significant account එකක් course එකක්ම audit කරන්න නම් if you want to do proper audit for each and every significant account or disclosure, it should represent the class. Because you should know the process, you should know the overall understanding, right? Once you are entering to the school, some student is there, he or she doesn't have a class. Not realistic, right? Whatever this, all the students and all the students significant to the campus, so they should have a batch. So they not you can do a kind of a design and implementation testing. You can do a walkthrough. Basically that no class එකක් නැති student කෙනෙක් ඉන්න බෑ. class එකක් නැති significant account එකක් නැති disclosure එකක් නැති දෙන්න බෑ. එහෙම වෙලා තියෙන audit වල. At the conclusion stage, at the reviewing stage, some critical balances are there in the books. We don't know how it came to the books. It means what? It not represent the score. We have not covered the walkthrough test for that. What may be the account? Some provisioning account, right? Sometimes they are doing payroll process. they have not covered the gratuity. They have not covered the design and implementation effective gratuity balance. If we so, we have to do again a source identification. We have to cover whatever the significant accounts and significant disclosures, right? So now we are at this stage. We completed significant accounts and significant disclosure, code identification, performer, walkthrough. So I will tell you how we are going to perform a walkthrough, what are the documents we have to identify. Basically what? We have to observe the process. It may be a tax receipt, it may be a transaction source document review, it may be a board minute review. So depend on the transaction, right? Or PPE process process. PPE also containing different aspects. PPE disposal, revaluation, depreciation, acquisition, different transactions. So then you have to evaluate that as well. So then walk through. You are performing that. So then you can draw a flow chart, process documentation, and you can come up with the kind of a control map. Control map means so whatever the risk and whatever the controls map. Right? And then you can have a proper understanding of the process, basically. And after doing walkthrough, what's the step? Then what's the step you are doing? Already have done it. I have already given that knowledge. After walkthrough, what you are doing? We are going to do what? Combine risk assessment. We have to perform. We are going to do the risk assessment. Combine risk assessment, right? We are going to do the combine risk assessment. To combine this assessment, what is the information source you are using? Critical information source. That's the walkthrough test. So that once you are doing your walkthrough, you have to do the combine this assessment to the assistant level. Right? Doing combine risk assessment. After doing combine risk assessment, what we are going to do? We are going to plan audit procedures. Plan audit procedures to the assessment level, right? Plan audit procedures. Audit procedures can be divided into different aspects. Substandard procedures, POC, right? JE testing, other audit procedures. We are going to decide what are the procedures we are going to do. So then, substandard procedures can be divided into two different aspects. Substandard procedures, other substandard procedures, primary substandard procedures. O, TOD, OARP. Just of details of analytical review procedures. different classification of standards. So how about TOC? What? Test of controls. Test of controls ගැන මම කලින් කියලා තියෙනවා අර statement එක. Can you remember that? Can you remember that? I know that at that time, once I am repeating this in the latter part of the mid of the next series, you can remember this. But I emphasize that at that time, firstly, TOC is an option. TOC is option. The option, not a must. It is not a must. We don't want to know this. Exactly, we don't want to say that we want to do TOC. It's option. You can decide. It depends on your audit strategy. Test of control, right? So then, in a control, we have three different stages. What are they? Design, implementation, and operation. Design and implementation was tested on the walkthrough. Operation will be tested on the TOC. Right? Operation will be tested on the TOC. Operation want to be tested and each and every time. It depends. What operation will check on the model. It depends on it. Design එක કોઈ implementation එක કોઈ නැත්නම් operation check කරන්නේ කොහොමද? Design and operation check කරන්නේ. There's no design or implementation. Are you going to test again operation? Waste of time. Right? It depends. Sometimes design and operation perfect. Sometimes it's not cost effective to do TOC. Why? No need. Let's say we have two different borrowing agreements. Let's say loans and borrowings. So what's the balance in balance sheet? Loan capital, accrued expense, interest expense, loan and borrowings. Two loans, right, for the year. Walkthrough test done. We understood that design and implementation. Are we going to check the operation? Controls no need. Why? We have very minimal transactions. We can check full substantive approach. We can use substantive approach. So to check these balances, to verify these significant account and balances, we can use substantive procedures and test of control, right? Sometimes you are doing fully substantive, sometimes you are doing TOC plus substantive. That depends on your audit strategy. TOC, you are doing TOC or not, or we are doing full substantive. What do you think about? If you are doing TOC and then doing substantive procedures, so what's the gravity of substantive procedures? At which time you have to do more? If you are doing full substantive procedures, you have to do more full substantive approaches, right? If you are doing TOC plus substantive procedures, less substantive procedures, right? If you are doing full substantive procedures, you should do more procedures. Why? You are not taking operating effectiveness of the control. There may be different reasons. It may be not effective design operation, maybe cost effectiveness. What depreciation can කරන්න තියෙන්නේ? PPE depreciation. Right? PPE depreciation. So then what you are going to do is you identify design and implementation. So then we understood one asset. So then depreciation calculation is correct. It was performed by senior executive. So then are you going to test again the TOC operation? No need. Why? You don't want to test that control further and further. What you can do? You can directly calculate that for the whole bulk as a substantive procedure. No need to do TOC in the operating effectiveness. Right? That's difficult to understand, right? That's a decision of audit strategy. That's It's tricky to understand. It will take time. Don't worry about that. Get the basic concept first, and then you can decide. People who did audit, you can match what I'm telling you. So then basically we should understand one. Once you are doing procedures, we have basically two substantive procedures and DOC. DOC is the option. The substantive procedure is a must. You can do DOC plus substantive or full substantive approach. You can say that a hybrid approach or substantive, full substantive approach. In audit, we may have different approaches for different balances. Right? For revenue and cash, we are doing TOC approach. TOC plus substantive procedures. For PP&E and borrowings, we are doing full substantive approach. Why? We don't go to the TOC. We have done walkthrough. Walkthrough is a must. Design and implementation understanding is a must. There's no any choice. Without design and implementation, you can't do substantive procedures. At least you don't know what to ask for the as supporting evidence. To ask the supporting evidence, you should know the design and implementation. To do that, you have to perform walkthrough. Walkthrough is a must. TOC is an option. What essay got clear is only at one. Walkthrough is a must. TOC is an option. Give a kind of a one-page essay. Right? I hope you are getting something right about audit process. So now we are going to start audit procedures. Before that, with this basic understanding, you should be there. So then only we can freely start our audit procedures. It will take around another 2-3 lectures to discuss audit procedures. To do that, we should have proper basic understanding where we are, what we are doing now. We are doing substantive procedures, right? You should have that understanding. Otherwise, it's really difficult. Otherwise, it's like a some procedures very hectic situation process. Different balances, different procedures. Really difficult to remember, recall those things. If you have understanding, you can at that moment you can decide what's the procedure we have to decide. Make a hurry the what I should do. That's what it is. You have to think as audit manager. So for that, we should have this understanding first. So what we are going to do, we are going to issue audit report. As it is, we can't do that. We have to have kind of a significant account at this portion. එකට දාලා audit කරන්න බෑ නේද? දැන් අනේ බඩු මල්ලා කෙනාව බඩු මල්ලම දාලා වෙනවද මේක හටියද? බෑ නේ. මොකද කරන්න ඕන? කැරට් වෙනම නේද? බාණ්ඩක් වෙනම එහෙම separate කරන්න. දැන් තමයි classes හදලා තමයි කියන්න ඕන. So then for different curry, we are putting different these ingredients, right? So we are boiling different tastes. We are boiling different, the heat also. We are keeping this in the whatever the cooker or something like that. So there is different time, right? එළවලු වෙන විදිහට නෙවෙයි පලාව යන්නේ නේද? පලාත්තියන් හිත දෙලා වෙනකම් එකක් දුඹුරු පාට වෙලා යන්නේ ඉතින්. So you are doing different audit procedures for different balances. You are doing audit procedures for PP&E. You can't do same procedures for cash. ඔයා මාළු වලට දාන්න මේව පලාව වලට දාන්න කිව්වොත් කොහොමද? ඒ වගේ තමයි. ඔයා PP වලට කරන procedures if you are doing for cash, something else, right? The way you are preparing meat, you can use for fish, but you can't use for whatever the vegetable curry, right? So different audit procedures you have to follow. So that's why we have a work allocation, work plan, different risks, different tastes, right? If you have a proper audit report, you should have a combination of curries, right? In an open buffet, we should have a variety. So that variety should be developed by a proper chef. That variety should be developed by a proper professional auditor based on the risk assessment. chef will be decide the buffet based on the required taste from the audience. එහෙමද කරන්නේ? ඔව්. ඔයාලා cooking ටික බලනවා. එන්නේ Chinese නම් Chinese related buffet එකක් තමයි හදන්නේ. ඔයා concept එක බලනවා. Concept එකේ තියෙන්නේ insurance related balances. Now, are you going to plan for the real estate? No. You have to address the insurance. So that's the requirement to work auditor. Right? So with that understanding, today we are going to answer assignment කරන්න පුළුවන්. දැන් assignment එකක් දෙන්නත් ඕනේ. Don't worry. So then this is the basic understanding. I hope you are getting. I expect that if you know the courage to learn this, my attempt to do that, and whatever the area you are going, here or whatever the country you are going as auditor, you can use this logic, right? Whatever the exam you are supposed to face, ACC or CIMA or whatever the audit exam, don't do again classes, right? Don't pause it there. Our class learn this as a one go, then you can be a audit knowledgeable student or audit degree holder with a proper audit knowledge. So that's the basic understanding. So whatever the Viva or annual report marking or whatever the forum, whatever the audit committee you are attending, you can use this. That's the target. Exam and the A pass or A plus is the byproduct of that, right? With that thought, so that today we are going to wind up. So we'll meet up with another effective lecture next week, right? Thanks. Thanks for joining virtually. I hope your continuous participation. So today's lecture is really important. So we have a track today. Next week onwards, we are starting on it procedures for 1 by 1 balances, right? Science sheet. ඒක මුලින්ම දෙන්න ඕනේ සයින් කරන කල්පිට කරලා යන්න පුළුවන් නේ. මම සාමාන්‍යයෙන් එහෙමත් කරනවා. මම සාමාන්‍යයෙන් කියන්නේ සයින් කරලා යන්න පුළුවන්. ඒක it's not මේක දැන් රෙකෝඩ් වෙනවා. Not comply with the university protocol. Attendance is to be there. So my logic is people should voluntarily stay here. So they should have a passion to learn. So they just came and signed and go with that expectation that that person, that student can't survive in the degree. That's obvious. Yeah, lecture එක දෙන්න කැමැත්තෙන් නෙවෙයි නම් you are signing here, you have to be professional enough to give the attention in dual mode, physically and mentally. ඊළඟ ක්ලාස් එක තියෙනවා මේ. ඒකේ කට්ටිය ඉතින් 90ක් physically ඉන්නව mentally. සයන්ටමයි mentally ගන්න attention. ඒකට කියලා තියෙන අද එන්නේ පහ lecture එකට console ගන්න පහක් හදා ගන්න නැහැ. ඒ level එකට control කරන්න වෙලා තියෙනවා. So I'm not using that approach to you. Right? ඒක කරන්නේ නැහැ. We have to control, right? We have to give that knowledge anyhow. Not the degree, not the exam, the knowledge is the degree holder, right? Okay, that's it.
Excuse me, sir.
Yes.
Sir, excuse me, sir.
Yes. You're audible. Go ahead.
Sir, one humble request, sir. I think today lecture has not recorded. Sir, is it possible to inform IT team to check to get the record lecture?
It's recording, right? I feel this record is indicating red mark. See? Oh, it's a serious place because today the is really important because it doesn't include the slide deck. So the whatever things I draw and whatever the link is the really important thing. Part not take repeat. But the audience again already the obvious, that's okay. At least if you can understand 60%, that's enough. We'll check with the IT team.
Okay, sir.
So if not, we'll repeat this again, right? You see, today is a very important month. So we'll check with our IT team and we'll get back to you.
Yeah, so thank you. Because we are logging through office actually. Currently, I am at office. So it will be
Okay.
difficult real time to watch your videos. That's why.
Yes. That's understandable. So you talk to them. So you are not getting this full course today lecture. Definitely, I have to repeat that because today I discussed a very critical aspect. So whatever the link and everything, then I have to repeat it again. So we'll check and get back to you. Right?
And so one more thing, sir. Some lecture materials you are referring is not available on the LMS, sir. Is it possible to upload these documents also?
Yes. Matter is, so I uploaded. So in the LMS, it's visible only one lecture. So the lecture material one, I uploaded all three. So what I can do is I will check that the technical issue with the team. And for the time being, I can upload that to the WhatsApp group. I hope that all are in that WhatsApp group. So people who are coordinating, make sure the completeness of the WhatsApp group. Completeness means all the students should be there. All the transactions should be completed to the correct period. The completeness, right? So then ensure that completeness. So then I'm posting whatever the group, the related materials and reading materials and supporting questions. So that I can give the answers as well for the exam questions, right? So then you can ready for that. So I will upload that to the WhatsApp group as well, right? Okay. I hope
Thank you,
that.
sir.
So then that will solve it out all the doubts. So then, do a good job.